What's good, YouTube? We are back with another video, and in this video I'm pretty much just going to explain the first thing you really got to know in trading, and that is going to just be liquidity. So let's jump right into it. So if you don't have real-time data, meaning the S&P 500 E-mini futures and NASDAQ 100 E-mini futures, you'll see it says CME. That's how you know it's real time. Boom, data is delayed because obviously you need to get real time, blah, 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 right? If you don't have that, you can get these charts right here. Then they look exactly the same. You might not get everything, the exact same, like this high right here might be different than it right here, right? But at the same time, it's still forming out the same exact way, and the market is still doing exactly, like here, I'll show an example. I'm showing you guys based upon liquidity. If you look at this high right here, and obviously I'll get into that, and you look at this high right here, it's taken on both of the market, both of these. So you could not download, but you go here, you add them to you add the symbol, you search up US NAS 100 Owanda, and you'll see this is what it is. And the same thing for S&P 500 index Owanda. So let's just jump right into it. So what is liquidity, right? So liquidity is a high or a low being put in the market. So meaning you'll have a candle just like that, boom, and the lines coming out of them are wicks. So we're going to use this example for both of them. So you have another candle just like that, like that, and you'll have another candle. So a high or a low, it consists of 3 candles. So obviously all these candles here, there's multiple. And if I'm on the 4-hour time frame, so if I zoomed in, you'd see a lot more. But high or low consists of 3 candles. Doesn't matter. It's for both of them. So, boom. What creates a high? A high gets created based upon the middle candle. It's always going to be the middle candle. So the middle candle, the wick has to be longer than the candle's wick to the right and to the left. So if you look to the left, is this one shorter? Up. Is this one shorter? No. So is this a high? No. But if I showed you this, and I went like that, right? This one looks like got a little off track. Boom. And I asked you this, is there a high? Well, boom, middle candle, is this one? No. Boom, this one's higher. Okay, word, let's move this one. Well, obviously can't be this. Boom, let's look to the left. Oh, that one's shorter. Oh, that wick shorter. Oh, that means that there's a high here. Boom, it's shorter. Okay, word. That means that there's a high here, right? So it's simple as that. It consists of that. So now if I told you, is there a low here? Okay, word. Let's look at this middle candle. Boom. Oh, it's shorter. Nah, this one's all the way down here. Is there a low? Not here. Boom. Let's look at this one. Is this wick shorter? Yup. Is this wick shorter? Yes, it is. So now does that mean there's a low? Yes. It's that simple. So that is literally how liquidity is formed. It's based upon buy and sell orders being placed in the market, and these wicks that shoot out. So now if I draw it down here and you look just like this, right? And you look for 3 candles, right? And you look for the wick to be higher than the ones to the left and the right of it, or shorter than the ones to the left and the right of it to create a low. and obviously it had to be the middle candle, then that means you would find liquidity. So boom, I draw out a high, I draw out a low. I'm gonna draw some more out just to give you an example. Okay, word, 4-hour high here. Why is this a 4-hour high? Okay, well, I look to the left, this wick right here is down here, but the middle one's all the way up there. I look to the right of it, this joint's right there, this one's up there. That is now a valid high in the market. And boom, you start to notice them quicker because you're like, oh, well, word, it's that simple. You know, like, and you'll start being able to see it. Oh, shorter, shorter, high, shorter, shorter, high. Boom. You feel me? It's really that simple. So now, and obviously a high gets created at, the high. So ignore all of this. Just ignore it for now. So you're only looking from this red and forward. Only look at the right of the screen. So buy side liquidity is resting highs in the market. Sell side liquidity is resting lows in the market, right? So the only way the market will ever put in a high is if the market starts to sell. That's it. It's if the market starts to sell. So if you really start looking throughout every single time, green is it buying and black is it selling, right? If you look, and I'm not saying the only time, you might find highs within the market buying, like right here, but I'm talking significant highs, right? So obviously the market's buying, it's all on the 4-hour time frame. So you're gonna see a lot more, solid candles. You're not gonna see a lot of black, a lot of green. But again, there's obviously a high. But I'm saying that the only way a high will actually get put in is if the market starts to sell. And a valid high. So like we buy all the way up, right? And we start to sell. Start seeing black candle come in. Boom, high now gets put in, right? We start to buy, we start to buy, boom, we start to sell. Boom, another high gets put in because we are starting to sell off. Meaning we are leaving buy side liquidity. So all liquidity is just highs and lows. All it is just buy orders and sell orders being placed in the market, and it's just money. All it is just liquid cash. It's money. All the stock market is money. Banks, institutions, people with a lot of money, hedges, so much stuff that goes into this, like so much money. So like now what would consist of a low? Okay, word. Well, it's when the market had sold already and now it wants to start to buy. So we sell and now we start to buy, right? Well, that would actually be a low right there because this wick is shorter than this one. And that one's all the way up here. That would be a valid 4-hour low until the market comes past it. So when the market comes past these lows, right? Now you gotta stay with me here too. When the market comes past these lows or these highs, that means that money is now taken out of the market. You have to put a sell order in from here. So from when the candle opens, you have to put a whole bunch of money in to tank it this low, right? And you have an order resting at the highs. So people will put their loss limits, they'll take a short position and they'll put their loss limits, like banks, they might put their loss limits right there. They are the market movers and they make this market, and they might target all this low, like this low. These are lows. Obviously, they're not, one's not shorter than obviously the other one, but if you mark that out and you drop your time frame, what do you see? Boom, a low, a low, a low, a low. And you don't have to just leave it there. You can mark it all right there because all of them are yet to be taken out until, like I said, we had came and we sweep it, meaning we come past it. So banks will, again, let's get back to it. Banks will enter a sell position or a short position down to these lows. You know, they'll be in their position right here and they'll ride out all this, making millions, you know, trillions, who knows. And once the market comes all the way back up, right? All the way back up, and now it takes out this high, their order is now filled and they're done. Whether they took out their money or they let that joint ride all the way down. But if the market comes all the way back up and it takes out their order limit, boom, they're done. It could be 0, it could be 5 million, who knows, you know? So what I'm trying to explain is just liquidity is just cash. It's just buy and sell orders that are resting. So sell side liquidity will be resting at the lows. Buy side liquidity will be resting at the highs. And why I'm emphasizing it so much and explaining it is because liquidity is truly one of the most important things to understand when you first start trading. If you don't understand what liquidity is and how to apply it to your trading, you will be confused for a while. You have to find significant highs and significant lows. You can't just jump on a 1 minute time frame because you're not going to trade based upon the 4 hour unless you're a swing trader. But you're not going to just jump on the 1 minute and be like, oh snap. Like you're not going to just be so zoomed in and be like, oh, there's a low right here. Oh, we took it. Boom. Since we take it, I'm buying right there, putting my loss limit at the low, and now I'm going to target all the way up here. What happens? You eventually start making some money, and then bam, you're stopped out, and you lose however much. And say you had your stop loss down at this low, or maybe even this low, because you were, that confident. What happens? Well, if you had it at this low, you actually got stopped out by like an eighth, or nah, not even that. You got stopped out by like 0.2 points, And what did the market then do? It went without you, left you, and now you're confused and you're mad, you're raging, and you're so zoomed in because you thought like, oh well, I'm looking at this low and it got taken, and bam, like I should have bought. You know, you could have really did the same exact thing here. You seen this low get taken, bam, you're gonna go long because the low got taken. You're gonna take a long, and you're gonna target here, or you're gonna target here, wherever you're targeting. You're gonna have your loss limit right there, and now this time it's gonna work. And what happened? Bam. Obviously this is just an example, but that's truly what happens when you just have zero clue what you're doing. So liquidity truly is, in my opinion, it's the first thing that you have to learn. You have to truly learn. Like you obviously have to know what candles are. I'm not gonna go and explain what candles are because I feel like you could read a book about that. You don't actually gotta know. Like you gotta know what the open and close means, and how it works, and obviously the wicks and all that stuff. But that'll take you probably a day. Like it's not nothing. It's not nothing like if you really don't understand that, like I said, like trading isn't truly for everybody. So this is for just people who are trading and they know what candles already are, and they're trying to like strengthen their trading. Like you can learn that somewhere else. I truly believe because like me personally, I learned that maybe in like a week or two. Like like the candles open, close, and what it means if it closes here or closes there, and I learned all that probably in about a week or two, but I was practicing it. So, and I did not learn that from like ICT or nothing. I learned that from like old TJR videos. So like, and obviously my friend, he helped me and stuff like that. But you can read that in a book and truly get the knowledge you need. But it's not something to be overly like, "Ah, I gotta know what these candles mean." Like, nah, you'll know. Like they're, but this is all it does. You know, the market just is black. Like from my screen, it's black selling, green buying candles all day. You know, so I'm gonna erase this, right, and I'm gonna show you what liquidity means and why is it truly significant. So we got a high here, right? If you look at the dashed line, it gets swept. You got a high here. Look at the dashed line to your right, like over here, it gets met. To draw it out to show you, but the dashed line will show you if you have it lined up perfectly and your cursor's on it, it'll show you if it got swept or not. Boom. So all these highs are still valid until right there, right? So now, you know, like this is a significant high because we have a high here, here, and here, all kind of relatively equal. Not this one here because this one already gets swept, right? And then we had a move. We rebalance, we sell off, we do all this, we do all this, we do all this, we do all this, and then boom, now we finally take out this one, and that one. So this high already had its significant meaning, you know, the day before. So, you know, the previous days before, it doesn't mean nothing anymore. So, you know, that's gonna happen a lot, like this low right here. Once that gets taken out, that low don't mean nothing anymore. You're not looking at that anymore. This is now, this is old news, old news, old news, you know, old news. Like nothing means something when it already had its, you know, when a story is already told 10 times in a row and, you know, everyone's heard it, everyone can read that joint right back to you word for word, it's over, you know? And that's kind of how I see this. Like, if you have to find something significant, you have to find the highs that are significant. Like, you could have had this marked out, right? You could have had this marked out, and now once that got taken, you could have been short. You could have been short, and you were like, "Bet, you know what? I'm going short, bam." But you didn't know we had that high, you know, resting, and that one actually was the real main draw that the market wanted to take out. So now, what's the next high that's going to be, you know, valid? It's going to be up here, and from here on out, I won't keep drawing lines all the way up here. No, I'm not gonna just keep drawing lines to the highest point, you know? This is all-time highs. I'm not gonna draw lines up into all-time highs. I'm gonna start moving in to now our days, you know, like where we're really at trading. So now we're here now. This is our most recent high. This is our most recent high. This on a smaller time frame is our most recent high. That equal high, you know, that's how I'm going to start drawing my highs. You know, I'm not going to just keep going and keep going. Obviously, when we're pushing up like this and we're seeing like where is the market, you know, hunting, where are we looking for, that's how I go based upon it. Well, that would be the next high that would, you know, likely to get hunted until we have some sort of move. We obviously had our move. So now I'm not going to just continue to look for this high. If you're targeting this up here, you know, you're going to be clueless. So, and that's just the honest way to, you know, put it. So buy side liquidity, because it's a high, buy side liquidity gets taken out the market. What happens? The market sells off. And now what does it do? It hunts opposing liquidity. So now it's going to target sell side. Jump to the 1 hour, that low gets taken. What happens when this low gets taken? Well, let's just keep jumping down time frame. 15-minute. What happens when that low gets taken? We start to see that, you know, those buying candles get put in. And that's as simple as that, you know? There, somewhere in here, when this low gets taken, someone in here seen this low get taken. Excuse me. And all they did was wait for some reason for, you know, their system to enter somewhere in here, and they rode it all the way up here. I will teach in another video what these fair value gaps are, but they wrote it all the way up in there, bam, you know? Yeah, their stop loss down here, they were protected. But the reason is because they followed rule number one. They waited for a form of liquidity to get taken out, then they took their trade. So, you know, that's what I'm just really trying to emphasize. Once that form of liquidity is taken, whether it's buy side or sell side, whatever happens first, you look for the reaction after that. What is happening after that? And that's going to truly, truly explain to you, can I take this short or can I take this long? So if I had sell side swept, you know, if you know what fair value gaps are we in a higher time frame fair value gap, meaning whatever one it is, whether it's a bullish or bearish, meaning a buying type of fair value gap or a selling type of fair value gap. Do we have the reason to go lower or higher? You ask yourself the questions, you put the context together. But liquidity, again, it's as simple as highs being put in the market and lows being put in the market. What is significant? Again, that's significant, significant, significant. This, not significant. This is not a high anymore. It was, it's not. This, no, no. This one, yes. This is significant high based upon the move that actually happened after we sold all the way off. We took out a low here, started reversing, boom, and this actually started our reversal. This low getting taken. So yes, but the reason why, sorry, the reason why it's not necessarily as significant as this one is because this one is even higher than that, and it still has yet to be taken before, and that one is resting. It's like that one's king up there, It's just waiting. It's an order that was called in from here, and from here on out, we just kept selling. So if they held their order right there and they sold, they were in this trade from the 3rd or the 4th up until the 25th. So 22 days, being in a trade, and banks will have orders in. They'll have orders in. So like you gotta understand, like, yeah, we're day traders, we day trade and we're this and that, but you gotta understand, like, the banks are who got the money. There's corporations and these hedges and all these like people with like large amounts of money. Those are the people with these orders in, So that's pretty much, gonna wrap up the video. That's gonna explain mostly, just a simple understanding of what's a high and a low, and obviously what is liquidity. That's, it's as simple as that. I'll go over it again. Liquidity is just highs and lows resting in the market, and they are it's just liquid cash. Liquidity is just liquid cash. It's just money. All it is just money. So I'll tell you, it's what happens first. If the low gets taken first, like this, and we take the low from here, now I'll target back higher. Whether I'm targeting a fair value gap or I'm targeting these highs that are resting up here, now I'll target up higher, and I'll put my stop loss here, and I'll target, here, here, whatever I'm saying, just for an example, right? You'll take this, obviously, you don't trade off the 4 hour, but all of this is fractal. Everything goes down in time, and you'll be able to see this on the 1 minute that all of this looks exactly the same, whether we're on the 1 minute, the 15 minute, like, look, bam, equal high still. Jump to the 1 hour, equal high still. Jump to the 4 hour, equal high still. Jump to the 5 minute. Zoom it out a little bit. High, high. Those are the same exact ones that were from earlier. And now you start to have, these internal highs that get put in and stuff like that. So again, you go based off what is significant. and hella tired trying to grind out this video. But yeah, you go based off of what is significant and what has the context. So like I said, I'm not gonna over explain this video. I'm not gonna try to make it too long and try to like put my system in there and try to explain it all in one video. I'm just gonna go step by step pretty much, because if you really want to learn, you have to take it step by step. You gotta go into the market for a week straight just looking for liquidity. Okay, word. I want to see what happens when this level gets taken out. Oh snap, yo, that shit did sell off after the buy side got taken. All right, bet. All right, I marked out this buy side. It got taken, but nah, nothing even happened. We didn't it's as simple as this. Like we took out this buy side right here. We took it out right there. But what did we do? We kept ripping. Why? Market wanted to go higher, wanted to hunt out the significant highs up there. So this, yes, it's significant for sure, but these are more significant. These have orders resting, like resting. This high, if you look close, this high already took it. This high right here already got swept, just like that. Got a little bit of a sell-off, sold off, boom, and now we're starting to hunt that new high. And what are we also doing? We're hunting these ones up there. So it just shows you you know, you gotta be able to go in day by day, look for it, and now once you learn what liquidity is, now you're like, all right, bet. Now I know what liquidity is. Now I want to learn how to actually trade it. Well, you're not gonna just trade liquidity sweeps. Liquidity sweeps are you can't just trade that. You're gonna trade the next step that you just keep adding more things to your arsenal. Like you can take your long or your short model based off a high getting swept, and you can put a stop loss, put a target, and boom, you might start winning. But you want to get better. You want to perfect your risk to reward. You want to make sure, bam, I put on 150, and I know if I win, I'm banging this for at least 500. You know, or if I'm putting on 300, banging this for at least 800. You know, and now like why you're losing that 300, because you should have it there. So again, that's all it is. It's as simple as that. It's a high, a low, being placed in the market and taken out of the market. And from there, like I said, you just need to practice. So not even in the future, but sooner than not, I'm gonna make the next step. Like what's the next step to, add to your trading. I'm gonna keep on trying to, get better at explaining it and putting it into examples and real examples. But I have live trades on my channel where I wait for buy side liquidity to be taken. I wait for the market to reject a certain area that I'd like it to see. I look for the reversal type of move I'm seeking. If it does validate, I'll take my trade. Bam. I have winners, I have losers, I have examples of when I don't wait, and boom, look what happens. So that's why I really preach that this is the first and the most important thing to learn, because this is where you're going to actually start. So again, I hope you guys enjoyed the video. I appreciate you guys watching. I hope everything that I'm explaining, you can finally start to put together and, start to understand. And, hopefully this can, start to elevate your trading. So again, I will have some more content out, the nearby future. I'm looking to start, teaching this so I could, put my model video out, teach everything first so then I could put my model out there and, you know, pretty much go from there. So again, I appreciate you guys for watching. Like the vid, subscribe. Until next time, peace.